Okay, ladies and gentlemen, before we talk about our next trading setup, I just want to tell you guys what we're doing here. We are building our arsenal. We are going to have a scenario for everything a stock can possibly do by the time we're done talking about our 6 trading setups. The next trade that we're going to talk about is what we call a regular moving average trade. So what is a regular moving average trade? We learned in a trend trade that we're only going to use our 9 and our 15 EMA. For a regular moving average trade, we are going to look to use our 65 and our 200 EMA. Let's take a walk over to the chart for a second. And before we start getting into details about the trade, let's just look what happened in this stock. This stock went from $110 to $112.50. Look what happened when it hit our 200 EMA. Went a tiny bit above it, and then the stock went straight down. Remember when we were talking about the strengths of our moving averages? 9 and 15, weakest. 65, strong. 200, Great Wall of China, or the Rock of Gibraltar. 99% of the time, when we see a stock hit our 200 EMA, we are going to make a trade. And if it hits the 200 EMA when it's going up, we want to be short the stock. And if it happened to hit the 200 EMA when it was going down, we would want to be long the stock. So a couple of rules on how we get into a regular moving average trade. Number one, we want a stock to move from its current price and go up at least 50 cents before it hits our 200 EMA. And when I say current price, we don't want the stock to kind of crawl up here. We want it to go fast. This took about 30 minutes to go from 110 to 112. That's good. That fits our scenario. So exactly how are we going to execute this trade? This is a trade that we're going to execute using a limit order. And we are watching this stock. It's Casey, and it doesn't really matter what the stock is. The stock goes from 110 to 112. We are going to put in a limit order at the exact price of our 200 moving average. And in this case, that exact price is, let's call it 112.50. As we're watching this stock go up, hey guys, ladies and gentlemen, we're watching Casey. It looks like it's going to hit our 200 EMA. Let's get a limit order out there to sell the stock short when it hits our 200 EMA. Stock goes up, hits our level. We are now short 100 shares of CASY at $12.50. The first thing we're going to do, like any other trade that we get involved in, we're going to put a stop order in. In a $112 stock, we'll risk between 50 cents and $1. I really don't ever want to risk more than 50 cents on a trade. So let's say our stop order in this trade is 113. That is our stop. We are risking 50 cents on this trade after we've entered the trade. The way we're going to get out of this trade on a regular moving average trade, we're looking to make between 25 cents and $1, depending on the price of the stock. So our target for this trade, when we're short at 112.50, target should be 111.50. So as soon as we enter the trade, 2 things we're going to do. Stop order at 113, and we're going to put a limit order in to buy the stock back or cover the stock at 111.50. And if we go back to the chart, we're going to see that very quickly, this stock went from 112.50 to a 111.50 right here. Here is where we would have covered that stock. If we did 100 shares, we would have made $100. If we did 300 shares, we would have made $300. Now, I know a lot of people are going to look at a chart like this and say, David, look how far the stock went down after that. Why didn't we wait in this stock and capture much more profit in it? The reason that we didn't wait is because this is our plan. When we do a regular moving average trade, we look to make between 25 cents and $1, depending on the price of the stock. It's easy to look at a chart afterwards and say, oh, I should have done this, oh, I should have done that. Trust me when I tell you, I've seen many, many times where the stock will go down to 111.50, we won't buy it back, and then it'll go straight back up, okay? Remember, day trading is all about putting these small trades in our pockets that are going to add up to bigger trades at the end of the day, the end of the month, the end of the year. This is our plan. And again, it's easy to look and see what happens afterwards. There is no such thing, and this is very, very important. There is no such thing as what we call the rear view mirror in trading. We have a plan, we execute our plan, and we're very happy with the profits that we make. Now let's look at another example of a regular moving average trade.